All right, hello everyone. Today, for those watching the live recording, today is going to be the day 4 of the boot camp with a slight change in schedule. Apologies for that. I just have an exam at 4 a.m. Eastern tomorrow, so it's gonna be really tough for me to stream it at the usual time because I need to be asleep. Oh, hey, Michael, what's up? But yeah, so if you guys have any questions after watching the recording, I know that a lot of you probably won't be able to make it. As always, just at me and I'll get to the questions as soon as I see them. All right, so day 4 of the boot camp. Today we are moving slightly away from the technicals about trading and reading charts, and we're more so focusing on the actual routines that are needed, and I guess you can call them frameworks that I personally use to trade. Um, and just kind of what I actually do from day to day and how I approach my personal day when it comes to trading. Oops. So we all know that consistency does not come on accident, right? You have to show up every single day in order to achieve consistency, especially in a game that is more, I want to say, unpredictable, right? Trading is not a game or a business where you could predict the outcomes easily. It's more so very difficult to do that, of course, as we all know. So trading isn't really improvisation, right? It's more so a repeatable, engineered, and very systematic process, right? If you want to be successful, of course. The consistency stems from the routine, right? Just as we were talking over the last two classes about the foundations of technical analysis and making sure that you have all the right basic but very important tools. This ties hand in hand with that and making sure that you have a system set up where it actually supports you becoming successful. A repeatable process is extremely important, right? And by process, I mean a routine, essentially, right? Now you can go into the very, very detailed view of it, right? And make every single thing about your day a routine that is based around your trading day. Obviously, if you're full time, that's the goal, right? But if you're not, it might be a slightly more difficult. But regardless, full time or not, right? I know a lot of people are either studying or some are at work or they have family responsibilities. But regardless, make sure that you do build some sort of routine that surrounds that, right? It could be different than mine, right? You could be scanning early in the morning before market opens. It could be scanning late night. It could be being more active in the later hours of the market open. It could be more in the early process. It doesn't matter, right? What matters is having one that fits you and having one that you stick to, right? Don't build a process or a routine that is very rigorous and very difficult to stick to because chances are you're not actually going to end up sticking to it, right? And it's going to be very hard for you to become consistent at it, right? You got to make it enjoyable so that you can stick to it and stay consistent with it, right? So, a repeatable process or routine matters because, first of all, it removes a lot of the emotional decision making, right? And this comes from two parts. The first part is the subconscious emotional aspect, right? And what I mean by subconscious is trading is a very mental game, right? We all know this by now. Making sure that your subconscious mind is healthy and energized is very important, right? So when it's not, you end up being a lot more emotional. What I mean by that in simple terms is when you have a bad night of sleep, right? You stay up late and you wake up rushed the next day. You're always gonna realize that you're more moody and more grumpy, and that will affect your trading, right? Now, it doesn't necessarily 100% going to affect your trading, but there is mathematically a certain percentage, right, that it will affect, right? Maybe for me it's 30%, maybe for someone else it's 50%, right? But regardless, you are putting yourself at even a very, very smaller disadvantage, right? In a game where the smallest details matter, right? So you don't want to be that guy that is doing that. That also comes from, for example, having a good diet, working out, getting some sunlight, right? All the basic stuff, right? I'm not talking about a 3 hour morning routine or anything like that. No, I'm talking about just the basics, right? And at the end of the day, what works best for you, right? What works best for someone might not be the best for someone else. All what matters is what works best for you and staying consistent to it, right? So that aspect, right? You want to remove that to make sure that you're not subconsciously, I want to say, being extra emotional. And two, just when you have a system, right, that you stick to, you don't have to second guess the actions that you take, and it kind of removes that aspect from it, right? That aspect of decision making. Next up, right, a routine is not just going to create consistency during one type of market where you're used to, for example, scrolling on Twitter, for example, during a bull market. If you scroll on Twitter, you're going to find hundreds of posts every single day about traders, about all the different names that they're looking to long, and everyone's talking so bullish and everyone's buying a lot of stocks, right? But in a bear market, things get a bit more quiet. You don't see a lot of hype around trading. You don't see that many people talking. When you have a routine that is set, right, you get to cut through that and be the same kind of a robotic approach every single day, right? That way, and throughout different market conditions, you're still doing and taking the same actions that set you up for success, right? You're not lacking in one or another, right? Next up, trading. This turns trading into a very performance-based system, right? I made a post on Twitter a few days ago, which I think is an amazing post. I don't know if you guys saw it, but it talks about how I approach trading. Not how I approach, but how I see trading. A lot of there's this what is it called? I don't know the word for it, but there's this thing that people are saying that trading is like a business, right? Treat trading as if it's a business. I disagree. I don't think that trading is a business. I don't think that trading is something that you could approach from the eyes of an entrepreneur or from the eyes of someone that is looking to create something, right? Or to generate revenue. No, it's not. Trading is not a business, right? I don't think of myself as a businessman who is trying to run a business through trading, right? I completely disagree with that. Instead, I think trading is a sport, right? And the trader is an athlete. And the reason for that is because no matter how much effort you put into trading, right, when the markets are closed, no matter how much preparation you put in, if you don't come ready to execute and you do execute and you do perform, your results aren't going to show, right? Unlike in a business, the more effort that you put on the back end, the more revenue you're going to most likely end up generating, right? I'm not a businessman, I might be wrong about that, but generally speaking, that's the way that people approach business, right? Trading, however, it's very different. It's very similar to sports, right? You see a lot of players that spend a lot of time in the off season working out, training, and getting ready for the season. And then sometimes when the season begins, right, and they go out there and they play the sport that they're playing, they underperform. And at the end of the day, the results are a simple reflection of how they performed during the game that they were playing, right? It is not a reflection of their efforts in the off season. Because no matter how hard they prepared, right, that does not, you don't get points, right? You don't score in the off season. You only score when the games are actually on, right? So the score will always stem from that. Training is the exact same. No matter how hard you prepare, no matter how much effort you put into it, right? When the markets are closed, educating yourself, learning, and all that. When the time comes to execute, if you're not executing, your P&L isn't gonna show that, right? So you need to make sure that you are out there and ready to perform. All right, it is a very performance-based game, very similar to one of an athlete. Right, that's how I approach it personally. If you guys have a different opinion on that, that's fine. But in my opinion, that's how I see it. Right, so just like in a sport, right, athletes have systems and routines built around them. And you'll always notice that athletes are very, very strict with their routines, right? Whether it's the time that they wake up, the food that they eat, the actions that they take, right? The warm ups that they do, the film review that they do after the games, right? They have these routines set in place, And I think in trading you need that same thing so that the outcomes, um, you set yourself up for success, and that shows in the outcomes, right, and in the P&L essentially, right? So when you have a very repeatable process, you get to turn trading into very performance based rather than something that is just effort based, right? You can't just work hard on trading. No, you need to work hard, you need to work smart, and you need to make sure that you are at the best of your ability to actually perform when the time is right. And you can't do that if you don't have a specific routine that you follow every single day. You just can't. It's impossible, right? I've tried it in the past whenever I'm traveling or I'm on vacation, right, or I'm busy with friends. My P&L will always end up slumping because I just don't perform as good as whenever I have a very strict routine that I've been following for weeks and weeks and weeks. Next up, a repeatable process also allows results to be reviewed and optimized, right? And what I mean by that is you get to, whenever you have a routine, right, one, you get to make sure that a part of your routine is to actually journal and review, right, and reflect at the end of the day or before the market opens. Another thing is you can actually see the areas of your day where, for example, you're lacking, right? Like I just say, the first 2 hours of the day, you realize that you don't trade as good, or the first 10 minutes of market open. You get to realize that and you get to journal that, and then you get to fix it and optimize it for success, right? So when the process and the routine is very solid, the results will eventually compound and show it. So my personal daily routine goes through these 5 steps. This obviously starts with the morning preparation, right? I'll be going more into detail into this in the coming slides, but it starts with morning preparation, and then the market opens, and I'm looking to execute during the AM session, and then we get into lunch hours, and I hop off the charts for a midday reset. I go to the gym, I just chill, I relax, I get off the charts, I just set my alerts and go, and then I come back for the afternoon session and into the power hour, and then the market closes, I hop off, and then later on I hop back on, and review and scan for the next day, right? This is the same framework that I follow every single day, year round, right? There are obviously some weeks where the market is just more dry, but I still make sure that I get those 5 steps in. I never take any step out. The only thing that'll change is the time that's actually spent on them, right? Like, for example, if the market is just seeing some lower volatility, and we're just in a low volume kind of environment due to the holidays or whatever other reason, step 2, for example, instead of me staying on the market for 2 hours, it'll come down to 45 minutes, right? But regardless, I'm always going through the same 5-step process every single day. So the morning routine is the pre-market. Now I know because I live in London right now, so I kind of have an advantage during the morning routine because I actually have time before the market opens, since it opens at 2:30 for me. So it might be a slightly more difficult for the ones that trade from the US, especially on the West Coast. I'm not sure what time exactly the market opens, but I'm sure it's something very, very early. But regardless, this goes back to one of the points that I made earlier, is to actually build a schedule that fits your lifestyle and your system, right? One that you get to stay consistent to. Now, I'm not asking you to wake up if the market opens at I don't know what time. Let's just say 7:30 in California. I might be completely wrong about that. I'm not saying wake up at 4 and start preparing, right? No, obviously not. But build out some sort of routine that you enjoy and one that you stick to. Right, so this is what I do in the morning. First things first, I wake up and I open the screens and I check on the overnight price action. Right, so I'll just simply look at what's happening on the Nasdaq, what happened on the S&P. Was there any futures action? Are we gapping up or are we gapping down? And then I'll quickly just look through the individual names that I have to see what names I've gapped up, what names I've gapped down, if any. Right, so I'll review that. And by global markets, I just meant the different sectors. I don't know why it says global, and futures, right? And then I'm also writing down what news are expected today, right? So do we have 10 a.m. news? Is there a Fed speaker today? Do we have any earnings at night? Is today, are we in an OPEX week? Is today of expiration? Is there FOMC around the corner? Do we have CPI? All of that stuff, the important stuff at least, right? I'm not paying attention to every single data set, but more so just the important ones. I'll take note of them and take note of what time they are occurring, right? Next up, I'll start to slightly watch the futures action or pre-market and just start to draw out some levels if we did have a big move overnight. And I'm also marking the key execution levels, right? So now after looking at the broader market and what happened overnight, now I'm starting to mark out the key execution levels for the individual tickers that I'm looking to trade today, which are usually identified the night before, right? Most of my scanning comes from the night, and then the next day my execution levels will just slightly change depending on if we gapped up or gapped down, right? If we're gapping up, am I going to look to trade a gap and go, or am I going to take this off the watch list if I'm looking to go long, right? If we gap down, am I looking to buy this dip? What levels do I need to see reclaim for me to get long, right? If I'm looking to go short, if we're gapping up, what levels am I looking for this to fail, right? Or if we're gapping down, am I going to look for some sort of intraday consolidation, or am I going to look for a pop back up to pre-market low? All that type of stuff, I'm writing it down, right? I have a Discord for myself that's a personal journal, a place where I just write all these things down, and I suggest everyone does that, right? Create a Discord for your own for yourself. Invite a friend or two, or maybe a couple of friends if you do trade with a circle. That way you guys can just kind of talk to each other, but start writing everything down. That way it's actually out there in front of you. Next up, I'm also defining the contracts, which are usually, again, drawn from the day before. And I'm also writing the exact stop loss that I'm looking at, right? So where I look to take my position off if it invalidates, and also where I look to start to take profit, right? The decisions are always made before emotions enter. It's very hard, right? Or it's certainly a lot harder for you to define all these things when the market is open and moving very quickly, right? Especially as an options trader. As a stock or commons trader, you can do that because you just have kind of more leeway and more breathing room. But as an options trader, you can't. You need to have everything written out and planned before. You need to make sure that the contracts are also liquid, right? You don't want to get caught up in a spready contract that's illiquid. So you want to write all that down. That way, when you see what you want to see and you like the chart and you like the setup, you're ready to execute in a very robotic or systematic way, right? You don't have to think about it, and you're not being very emotional. You're just like, okay, this is my plan. I'm sticking to it. If the outcome comes out in my favor, that's good. If the outcome doesn't come out in my favor, guess what? That's also good, right? I stuck to my plan. I was disciplined to my system. There's going to be days where I'm going to win, and there's going to be days where I lose. But what matters most is me sticking to my system. Next up, we've got the market execution and when the market actually opens. So the way that I like to go about it, right, as you guys know, I'm mainly a swing trader. I want to say 90% of my trades are held overnight. 10% are intraday attempts. Sometimes I do like to day trade certain tickers and certain setups depending on the market environment that we are in. But generally speaking, I am a swing trader, and the time frame that I like to hold my positions for is usually around 3 to 10 trading days, not including the weekends. I want to say the average is probably around 4 to 5, but it really depends from trade to trade. But generally speaking, that's kind of the time frame that I have set for myself. I suggest you guys also think about that and what type of kind of, not just trader, because I'm guessing all of you in here obviously want to be swing traders. I don't think anyone here is in here to scalp. I think scalping is very, very retarded. You should not be looking to be a scalper. Intraday trades obviously do work, but don't be a guy that's coming here looking to trade 1 minute candles for half a percentage point move. All right, so keep that in mind. So with that being said, the way that I go about the actual trading day is I'll trade the first 2 hours, right? So from market open up until around 4:30. It obviously does depend from day to day. Some days we do have some more volume and some more volatility, and I'll stick around for slightly longer than that. And other days I'll hop off earlier. But it's very important that I do hop off at some point because there is a very, very, very strong correlation between my red days and me staying on the charts while the market is open until lunch hours. There is no doubt there that the longer I sit on the charts into the lower volatility, low volume hours, the more likely that my P&L for the day is going to be bad. And that's just because, as an options trader, like I said, time is not your friend. And when you are buying into things and things don't move for 3 or 4 hours, you're putting yourself at a disadvantage, right? So I always hop off then, and I also give my brain a break, right? As I mentioned, I usually wake up 4 hours before market open, and out of the four, I want to say 2.5 is probably spent preparing for the day and just watching the overnight action. So by the time that 2 hours of market sets in, I've already been on the screens for 4 hours to 4 to 5 hours, right? So anything past that, and my brain starts to just kind of feel fried, right? I just feel mentally tired, and I need to hop off for a break. I know it might be difficult for some of you, including myself, to sometimes hop off, especially on days where you're red, because you want to obviously make it back. That's normal human psychology, but you need to avoid that, right? So what I personally do to avoid that is I've tried two different things, and I'm kind of bouncing around between them in regards to my routine. The first one is just going to the gym. I used to go to the gym before market opens, but then I realized I end up staying on the charts for too long if I do that. So what I started to do is just go to the gym 2 hours into market open, right? That way it's just part of my routine to get off the charts and to go to the gym, and I make sure I stick to it, right? The second one is a bit of a more kind of, I kind of want to say obsessed way to go about it, and that is I don't eat until I get off the charts. Might sound a bit crazy, but it works. And you also feel a lot more clear mentally when you don't eat. At least that's what I experienced when I'm fasting. So what I'll do is, let's just say I wake up around 10, market opens at 2:30, and by the time lunch hours kick in, let's just say around 4:30, by that time I'm starving, right? It would have been 6 hours and a half since I woke up, and I'm very, very hungry to the point that I don't care about my P&L, and I don't care about what's happening in the markets. I just want to go eat, right? So I will literally turn off my PC and just go because I'm just so hungry. Right? That way, there's just no way for me to sit any longer on the charts, and I'm just forced to get up and leave. Right? Those are the two that I've personally used to force myself off the desk 2 hours into market open. If you guys have any others, then do them. But I definitely just suggest just getting off the charts 2 hours. 3 hours is an absolute stretch and an absolute max. Anything past that, and you're just putting yourself at a disadvantage, and you're frying your brain, as well as just trading bad conditions. Right. Next up, I'm obviously looking to only execute the setups that I have pre-planned. I know that during market hours, especially if you're in a lot of discords and you're talking to a bunch of other traders or you're active on Twitter, you're always going to see a lot of names popping up, right? A lot of people are going to be talking about different tickers to trade and the ones that look good, and you're going to feel some FOMO, right? Again, feeling these types of emotions is fine. We are humans. We are going to feel those emotions. You cannot stop them from coming. But what you can do is just simply stop the action that you're going to take, right? So making sure that you only execute on the setups that you have pre-planned is a must. I think you guys have all experienced this, that you're there's a very strong correlation between your winning trades being ones that you've spent a lot of time preparing for, and your losing trades being ones that you just rushed and stumbled upon within minutes you're in a position, right? They might work sometimes, but over 1,000 trades, they won't work, right? You're gonna buy a bad chain a bunch of times. You're not gonna have a predetermined stop, and then you're gonna be hesitant to take off the position or to keep it, and you're just gonna be unconfident. It pops a bit in your favor. You trim for a 5% gain, and then it goes back down, and now you're kind of hesitant. Do I cut it? Do I add back? Right? It's very confusing and very messy. Waste your capital and waste your mental capital. Right? Always think about the next 1,000 trades. Right? If you're taking if there's an action that you're taking, right? Don't just ask yourself, is this an action that I'm willing to take on one trade? Because chances are the way that we think about it, right, as humans is, okay, I'm only gonna do this once. If it's a bad trade, let's just say, if you're getting super leveraged on a weekly, okay, I'm only gonna buy a lot of size on this trade that expires this week because I just think it's gonna work, and I'm only gonna do this once. I'm never gonna do this again. I'm sure you guys have all thought that many times in the past. I definitely have, and it's a very bad way to approach trading. Instead, I want you to ask yourself this: am I willing to take this same action over the next 1,000 trades that I take? And if the answer is no, then don't do it. Right? That's a very clear cut way to go about things, right? Whether it's sizing heavy on a position, whether it's buying 0 DTEs or weeklies, or whether it's just kind of timing the top or chasing a setup, whatever type of trade that you might be taking, right? Ask yourself, am I willing to do this over the next 1,000 trades? If the answer is yes, then go ahead and do it. If the answer is no, because you know that over 1,000 trades, this is not going to work, and you're doing something that is not in the system that you've built, then don't do it, right? So always ask yourself that. Obviously, as I said, we don't chase setups. Chasing setups goes back to everything I was just talking about for the past 10 minutes. And the time frame that I like to step away is usually around 3 hours. So that goes from around 4:30 my time, which would be 9:30, 10:30, 11:30 Eastern, until about 2:30 Eastern. So I come back about an hour and a half before market close, where we kind of have 30 minutes into power hour, and then I'm starting to look at things. And a lot of times you notice that throughout that 3 hour time frame, nothing usually happens, right? Names will maybe pop a bit intraday, but then end up giving that pop back down into power hour before the volume picks back up. So don't waste your time. Spend those 3 hours doing something else. You'll set yourself up for success doing that, right? Always remember, preserving your capital is much better than forcing trades, right? Always ask yourself two things, right? When it comes to capital preservation. Number one, has this setup earned my money? Right? I need setups to work for my money. I'm not just gonna throw my hard-earned capital, right? Money that I've worked very hard for over the last 4 years, for me to just throw at any random setup. No, I'm not gonna do that. I need this setup, right, to literally work hard and show me that it deserves my money, right? And what I mean by that is show me everything that I want to see within a trade, right? For a specific setup, all the checklists that I have built out, I want to make sure that it checks off everything. The time frame is right, the contracts look good, the RR is great, the probability is great, right? And if you guys don't have specific setups and what to look out for, don't worry, we will be covering that in the coming days. That's question one, right? Has this setup earned my money? Question two is, do I have the right to attempt this trade? You might be thinking, what does he mean by that? What I mean by that is, do I have enough experience trading this exact setup to trade it with size? Right now, I'm talking generally about taking trades with proper size, right? I'm not talking about starter positions or lotto positions or light positions. I'm talking about full sized or heavier positions, right? Ones that actually can leave a mark on our account, right? Do I have enough experience trading this? Have I traded this multiple times in the past, right? If, for example, you've never traded a parabolic short, right? Or you've traded it maybe once or twice in the past, but you haven't been successful on it, don't go and start to throw your money at it just like that, right? No, try it out first, right? Take one contract this time. Let's just say in today's market, silver, right? Silver has been ripping and it's setting up a parabolic short this week. If you don't have experience trading that, don't go into it with size, right? Instead, try maybe one contract if it interests you, right? Or try a very starter size, right? And then work your way up so that in the next coming weeks, right, when there's a different name that sets up a parabolic short, now you have the right to trade it because you've earned that right, right? You've had your experience trading this name, not this name. You've had your experience trading this setup, right? And you have the right to actually attempt it with size. And always remember that your experience is your experience. Someone else's experience is their experience, right? Don't think that because an experienced trader is talking about a specific setup, that means by correlation you have the right to attempt it because X person says it's a good setup. No, big mistake. Completely rule that out. As humans, the reason why we like to take setups from other people is because it removes the one thing that bothers us about trading, subconsciously at least, and that is responsibility, right? When you place a trade that is your analysis and your setup and your preparation, the responsibility is on you, right? Whether the P&L is a win or a loss, the blame comes back to you, right? When you copy someone else, whether it being following an alert service or whether it being taking someone else's setup or idea, that responsibility is subconsciously shifted towards them, right? And us as humans, we love to do that because now you feel no shame and you feel no responsibility and no kind of worrisome about yourself, right? If it doesn't work out, you'll just go to say, okay, well, it's not my fault, right? Maybe not literally, but subconsciously, that's what you're going to be feeling. In my opinion, you should not be in any alert groups. Personally, for me, I only have this Discord, the free server that I created, and then my personal journal. Those are the only three that I'm in, right? So I'm very blocked off and I'm very focused. I have no noise around me. Obviously, it is good to trade with the community, right? But copying alerts is not something that you should be doing. Um, like I said, I think I explained to you exactly why a lot of us love doing that and love following alerts, but alerts are not gonna take you where you are, right? No matter how good of a trader someone is, and no matter how good their alerts are, it is almost impossible for you to build consistency following anyone else. And the reason for that is because you can copy alerts, right? But if you don't have the sizing systems to support it, right, and so to support actual trading, you just can't be successful doing that, right? Obviously, if you do have a strong sizing system and you follow an alert service, maybe you can generate some consistency. But regardless, why do we want to depend on someone else, right? That's not the point. We're here because we want to learn the skill and implement it by ourselves and take full responsibility of both the wins and the losses. So that's kind of what happens, what I do during the market open and then market closes. And right as the market closes, the second I hear the bell, I'm shutting off the screens. Not for the day, but for a 2 hour break. Sometimes it might be a bit longer, but generally speaking, I get off my desk from 9 p.m. to 11 p.m. my time. So 2 hours. I'll go I'll go make food, I'll go out, I'll do something, I'll move my legs. Being on the desk for so long is very, very bad. I personally don't move enough, which is sad to say because I'm 21 and I don't move as much as I want to, especially while I'm here in London, because I'm just always so glued to the screens, but it's really bad. And I do try to change that every single day. But point is, when the market closes, get off the screens, right? Your brain needs a break, and your eyes, most importantly, also need a break. If you guys noticed, my charts are now black. I recently made that change. I still do sometimes use the white ones, but the white ones are usually just when I'm sharing my chart, just because it's more pleasing to the eye whenever I post a chart. But when the market is actually open, when I'm actually charting, I'm using the black charts. And I really like them because they give your eyes a break. It makes a big difference going from white charts to black, and you'll notice it just by how relieved your eyes feel when you're looking at them. Will you still implement the same schedule once you have graduated? Yeah, to be fair, I barely go to class. I actually skip most of my classes, so I don't have that much class. But the goal is, yeah, I will implement the same schedule. It's just I'm gonna be back home in Saudi, so the market is gonna open really late at 4:30, which is annoying. But relatively speaking, it's gonna be the same schedule. But yeah, so when the market closes, yeah, of course, brother. When the market closes, I'm getting off, right? And I'm taking a break. I'm getting off the screens. Ideally, don't get off the charts to go watch some TV, right? Or don't get off the charts to go game. Your eyes need a break, like I said. So make sure you give them that. But then 2 hours after that, I'm back on the screens for my nightly scan. This is usually when I'm more kind of relaxed and chilled out. I have my phone with me. I'm playing some music, and I'm just scanning through the market, taking a look through the different tickers. Um, Actually, wait. I just realized this is the afternoon session. My bad. I was talking about the nightly scan. But yeah, so this is the market, right? This is market open into lunch hours, and then I'm back for the afternoon session, which is the last hour and a half of the day, where I am trading the power hour, right? And usually I'm not placing any trades during this time. I'm more so just managing my positions, right? So I'm just looking at what my positions have done throughout the day. And if my positions look good into the next day, then so be it, no changes, and I'll just swing them into the next day. But if I notice that one is moving slightly against me, then I'll look to cut it or reposition or something like that, right? But relatively speaking, I'm usually just watching the close and seeing how things move. Right. Sometimes I'll add the new position, but relatively speaking, I don't because I like to have leeway into the next day. So I like to be up at least 10 to 20% of my position before swinging overnight. So yeah, that's the afternoon session, and then when the market closes, I hear that bell. I'm off. I take a break. For me personally, it lasts about 2 hours. But the most important part is just getting off the screens for some time, right? And then I'll come back and I'll scan for around 2 hours. But like I said, it's not like a very rigorous scan where I'm sitting glued to the screens, taking note of it. No, it's more relaxed. I'm playing some music. I have my phone with me. Sometimes I'll be on call with my friends. I'm more so just relaxed, right? I'm not stressing out. I'm trying to keep my stress levels low before I go to sleep. So I'm just kind of enjoying my time. And I treat it like a game, right? I'm just scrolling through the tickers and having fun with it. Right. So I'll usually click through around 100 charts. I know that might sound a lot. 100 charts is not something that is little. But keep in mind, when looking at, after let's just say a week's time of looking at the same 100 charts, the only thing that you're now analyzing after the first, so after day 7 into day 8, the only thing that you're analyzing is one more day of action, right? Your mind remembers what happened, what this chart looks like. Like for example, now if you ask me what does Nvidia look like, I can explain to you to the exact dot what each candle has done over the last 5 months, right? Starting from July, early July when we topped, I think it was It might have been July 31st when the Meta and Microsoft earnings gapped us up after FOMC off of 183.30. And then we built out a range, and then we got a sell into. We got an initial sell on July 31st, kind of a 3-day pullback, and then we popped back up into the range highs into 183.30, and we consolidated into OPEX in August, I believe, and then we sold off. And then after that sell off, we got back up, I believe, and we consolidated into Jackson Hole, I want to say. And then I think after that we got some sort of sell off before consolidating again. And then the OpenAI deal came, which gapped us back up to 183.30. And then we got a 3-day kind of pullback back down into OpenAI lows. And then we got a gap up, which set up a break over all-time highs. And then that break led to a 3-day pullback, which I thought was going to be the failed breakout, but it ended up not being the failed breakout, and we went kind of parabolic for 3 days, which led us into October 10th, where the China news came in and we sold off. Point is, when you're looking at the same charts every single day, you remember them, right? You don't have to rescan 100 charts and then go through 6 months of action every single day. No, you're just adding one more trading day or one more bar, and you're analyzing that, right? So I'm usually clicking through those, which are around 100. They might be slightly less because from time to time I do delete some names. Sometimes I do add names depending on the market that we're in, and depending on if I see names that are popping on Twitter. My Twitter is very, very organized. I only follow 30 accounts. 20 of them, actually maybe even less, 15 of them probably post charts. The other 15 are not really trading, but those are 15 guys that I trust. Some of them are friends that I know, and others are just respected people in the trading game that I've either learned from or I like their charts. But yeah, so I'm clicking through those names, maybe adding a new name if I do see something signing up. And then I'll also be updating levels and making my focus list into tomorrow, right? So nowadays, if you guys have been following me for quite some time, I know some of you have. A year ago, I'd be trading different names every single day, right? Relatively speaking, every single day I'll be clicking through or looking to trade different names, right? Every day I'd have, let's just say out of 4 names, 3 of them would be new on my focus list. As I've improved and grew as a trader, I've completely went away from that. Now, my focus list consists of the same names for weeks. A great example of that is XLE and Exxon. I think you guys know that I've been trading them since November 22nd, I believe, was the first day that I attempted them. And since then, they have not been deleted from my focus list. There have been days, obviously, where I wasn't looking to trade them because there simply wasn't a setup that was present on them, which also goes back to yesterday's class when I was talking about sticking to the basics of when a continuation looks ready versus when you have just a good read on the markets, right? But back to what I was saying, I'm more so focused on trading the same names for multiple weeks. Not necessarily weeks, but I want to say probably a 2-week period, maybe longer. Like for example, NVIDIA, I've been trading NVIDIA for months now within the distribution range that we have set up. But doesn't necessarily mean it's on my focus list every day, but it is on my watch list. And the way that I have it, by the way, for those that don't know, is I actually have 2 different watch lists. I have the watch list that has all my tickers, so all 100 stocks that I track, and then I have another watch list that's just called Focus. The Focus one is what I'm watching every single day, right? The Focus one, I'll show you guys on TradingView right after I'm done sharing my presentation, but it'll have futures, which is just what I personally track, the VIX and QQQ. And then it'll have the positions that I'm in, and then it'll have the focus of today So those are setups that are ready to be traded now. Everything is ready in them. And then it'll have a section called not today. So the not today would have setups that charts that I like but are not quite set up just yet. So I'll keep that. I usually have maybe 10 names overall. That way I'm not getting distracted during the day. But yeah, so I'm writing what names I'm looking to trade the next day, and writing down the levels, what I see, the setup that I'm looking at, and just describing what I'm looking at overall. And also writing down the invalidations, which is very important. So the way that I approach the market, now that we're done talking about kind of my actual the actual routines that I take, like the physical routines that I take, the way that I approach the market is a top-down analysis framework, right? I think that's what it's called, where I look at things first from a broader perspective and then I zoom in with a small caveat on step 3, which I'll explain in a second. So it starts off with analyzing the broader market, right? What's going on in the broader market, on QQQ and on the S&P. Nowadays, I'm not really focused on the S&P. I'm more so focused on QQQ, right, and Nasdaq, because I've been trading tech stocks a lot more. Right, so I start off with that, and then I work myself into the individual tickers, right? So I'm looking at the daily time frame of the individual tickers after identifying what I think of the broader market. And sometimes, by the way, I could think nothing of the broader market. That happens often. There are some weeks and some days where the market just doesn't really look like anything. It doesn't look like we're gonna move higher, and it doesn't look like we're gonna move lower either. So I write that down, right? I think that the market is not giving me any signs of where it wants to go next. Then I'll move into the individual tickers, right? Now I'm talking about the actual stocks, the Nvidias, the Teslas, the Apples, whatever it may be. And I'm looking at them on the daily time frame, right? The daily time frame as a swing trader is where my analysis stems from, right? Then I'll go to the weekly, right? This is the caveat I was talking about. I start off from the broader perspective, right, of the markets, but when it comes to actually analyzing individual tickers, I start off from the daily because the daily is the most important, and then I'll take a look at the weekly and I'll make sure that the weekly is not extended, right, and it fits what I'm looking at, right, on the daily time frame. So, for example, I make sure that if I'm looking to long something, the weekly does not look extended and does not look like it's setting up potentially a distribution based at the highs, for example, right? Because sometimes the weekly might look like something, the daily might look like something else. But the best setups will usually have multi-time frame alignment, right? So the daily matches the weekly, matches the hourly, matches the 10-minute, right? Everything is in everything matches, right? So after that, I'll go down to the time frame that I actually pay a lot of attention to, which is the one that I look to execute off of, which is the hourly, right? Where I'm marking out key levels and the gaps that are available. And then I'll go down to the 10-minute when the market is actually open and I'm executing on the 10-minute, right? But remember that context always comes first, right? Don't be a guy that trades the 10-minute time frame blindly, right? And doesn't pay attention to what's going on the weekly time frame. No, not the way to go about it. Bad approach. We want to understand the context of the chart. What's the story that's being told? What's the picture that's being painted? You guys are going to hear me say those two sayings a lot because the best setups will always have a story behind them, right? There are always going to be charts and setups that you can explain to your grandpa, for example, right? Like, my mind's kind of going on a tangent, but what I'm trying to say is it's something that you can explain very easily, right? You can't explain to someone that doesn't trade that you bought a 10-minute hammer because a price swept previous day's low and you want to target high day, right? You can't. But what you can explain is we are potentially entering a new narrative of rocket stocks, and they are all at relatively cheap prices, but there's a lot of narrative around them, and there's a lot of news that's popping around them, and they look like they are setting up for a big run. Right, that's a story. Another one, the AI bubble could be coming to an end, right? Or the AI bubble could be about to pop, or the most expensive stocks have become so expensive, and they are now starting to potentially enter into a decline after going up for multiple months in a row. Or what else is there? I'm looking to buy energy stocks because it seems to be that money is going to rotate here, and there's some fear in the markets due to geopolitical news. Right? Whenever there is a narrative, the setup becomes 10 times more powerful. Just remember that. And I don't mean by narrative as in there has to be news that's around it, but it's something that you could explain. Right? It's not something that is just price action and that's it. Right? Price action is obviously where my trading comes from, but you can also explain it. Right? And yeah, exactly. That goes back to what context is. Right? So always keep in mind, what's the story that's being told here, and what's the picture that's being painted? Always ask yourself that. And if you can't think of any, then chances are this is a dead setup that doesn't really have that much room. Here I have a slide that just quickly explains the difference between a professional and an amateur. Amateurs are always very rushed. They rush to their desks. They hop on their desks 7 minutes before market open with no plan. Right? They just got out of bed. They didn't really have any routine to start off the day. They just open their eyes and they're glued to the screens 5 minutes before market open, and the market opens and they're rushing and just reacting to everything that's going around them. Right? Professionals will come with a very detailed plan that was written out from the day before. Right? They've already done they've taken a look at what happened overnight in futures. They've written down what news is coming. They've written down their invalidations to the stocks that they're looking to trade. They have the chains that they're looking to trade. Everything's written down and everything's prepared. Amateurs focus on the outcome, right? Amateurs are stuck to their P&L. Amateurs, this is something that I think 100% of traders feel. And that is, the mood of their day depends on their P&L. Even I still struggle with this too today. Whenever I have a red day, my mood is just more likely to be slightly worse than when I have a green day. And that's fine. That's human psychology, right? But we want to work on that. We want to make sure that the mood of the day does not depend on our P&L. That is a very, 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 very bad habit to have that will stop you from being a successful trader. Right? Make sure to cut that out. So instead of focusing on the P&L, we want to focus on our systems, right? And how well we actually stick to our systems, right? Which is what you're going to have at the end of the 30 days, a full A to Z system to follow, right? So we want to focus on the process and the systems. Consistency is engineered, right? It's never luck and it's never accident, right? No one is just consistently beating the market over 5-10 years by getting lucky, right? It just doesn't happen. Some people get lucky for a week, a few weeks, a few months maybe, but no one gets lucky over 1,000 trades. Over 1,000 trades, if you are profitable and if you are successful, that came from actions that you took and consistency that you built. It didn't come by accident, right? So always focus on the systems and the processes and not the outcomes. Just as a final takeaway, remember, you want to have the same routine every single day, the same preparation every single night, and the same execution rules, right? You don't want to change these. You want to keep them the same. You want to have that strict system that you stick to. And by having that, you will remove a lot of the hesitation that you have, a lot of the anxiety that you have when you're in positions, right? And it's just going to fix a lot of your problems and a lot of your struggles. that's it for the presentation. You guys have any questions? All right, if not, I'm gonna go ahead and end the recording here. I will be sharing, by the way, a screenshot of the watch list I was talking about right after. So just check the Yusuf's life prep just so you guys can see the example of what I was talking about.